On my last video, we talked about several ancillary small positions in my portfolio. One of the issues that I'm having is just the number of companies that I have to do due diligence on each quarter. And with positions equaling about 45 positions in my portfolio, I was looking to see how I might decrease that number, reduce my workload over the next quarter. So I want to share with you the process that I went through. Maybe this will be helpful to you. So as your portfolio grows and you end up with positions that are small in your portfolio, maybe you can use some of this to figure out how to decide what to keep and what to get rid of in your portfolio. And again, my purpose here is to reduce my workload each quarter. So I wanted to take a look at all of these ancillary positions. So it should be a pretty exciting video. So hey, let's get started. Hey everybody, this is Kevin Burgess. Welcome back. And if this is your first time to the channel, or if you're new to the channel, just wanted to tell you a little bit about me. I am retired and I'm living off of passive income. One of those streams of passive income is my dividend portfolio. So what I do on this YouTube channel is talk about dividend growth investing and how we can use dividends to help bolster our passive income. On my last video, I talked about having nearly 20 positions, and it's actually 18 positions in my portfolio that are less than 1% of the portfolio. So any movement in those shares really doesn't move the needle in my portfolio. And if I am investing time every quarter looking at all of these investments, then maybe I should take a step back and make sure that they are positions that I want to hold for the long term. So I finished that analysis and I've made some decisions, and I want to share those with you because some of those are going to be kind of interesting and maybe even surprising to some of you. So if you like this kind of content, this is really about dividend growth investing. I would love to have you along for the journey. Consider subscribing to the channel. And also, if you like this content, consider giving me a thumbs up on this video. It lets others know that the content in here is worthwhile. I would really appreciate that. It would mean the world to me. And as you know, none of what I'm talking about here is investment advice. I'm simply sharing with you what my journey is and what I'm doing in my portfolio. Every portfolio is different. Every investor is different. You got to do your own due diligence about what makes most sense for your portfolio, but at least this will give you some ideas. And if you got a ton of positions in your portfolio and not really sure how to do some spring cleaning on that, maybe this video is just for you. So with all that said, let's get started. So I've put together a spreadsheet here of all of the positions that I'm looking at. There are 18 of them. And I've decided to build some, hold some, and sell some. So I want to walk through each of these categories. For building a portfolio, if I want to continue to build a portfolio of these stocks, then I put them in the build category. I'm not going to walk through every one of these stocks. I've done that probably on other videos. So if you're wanting that, shoot me a message or something, let me know, and I can point you to the right videos. But in this video, I want to give some thoughts around why I picked some stocks to build, some stocks to hold, and some stocks to sell. So let's take a look at the build category. There are 6 stocks. Of the 18, there are 6 stocks, so basically 1/3 of them that are remaining in the build category. So the idea here is that I want to continue building shares in these companies. And of those, I have WEC Energy Group, which is a utility that has a decent growth potential, has some exposure to green energy and things like that. So I want to continue building WEC Energy Group. I want to continue building Main Street Capital Corp. It is a BDC. In my opinion, it's the best BDC out there. So I want to continue building that position. And I'm going to wait on all of these until I feel that the timing is right to enter into more shares of these positions. Let's look at the third one, Raymond James Financial. I just opened that position a couple of weeks ago. So this is one that I had planned to build anyway, so I'm keeping that one. Kilroy Realty Corporation, that might be a little surprising. I'm going to keep that. It's basically a commercial REIT out on the West Coast, as well as has some property down in Austin, Texas. I believe it is significantly undervalued. I think there's a couple of things going on. One, it has to do with commercial real estate. There's a lot of pressure on commercial real estate today as there's uncertainty around whether we're going to have too much office real estate, commercial real estate for the future. And secondly, the CEO has decided that he's going to retire. So there's some uncertainty around who's going to replace that person and whether they're going to have the capabilities to do it. So I think there's a lot of uncertainty around Kilroy. And so therefore, I'm going to continue to build into that position. And then who wouldn't continue to build Realty Income? It is considered the monthly income REIT. So I'm going to continue to build the Realty Income portfolio. And then lastly, Cisco Systems. I did a video on that a month or two ago. Cisco Systems, I believe, has a wide moat. They have a great capital allocation process, and I'm looking for great things for them in the future. So I'm going to continue to build that. So those are the 6 that I'm planning to continue to build. Let's talk a little bit about the 5 that I'm going to hold on to, not necessarily build or not sell. I'm just going to hold on to them. One of those is Digital Realty Trust. I like having exposure to the digital REIT space. And for now, for me, Digital Realty Trust is that name. The next is Robert Half International, as well as Fidelity National Financial. Both of those, I believe, are going to have some struggles in the near future as we talk about recession and the economy. So I am definitely going to continue to hold them and look for better entry places to buy shares for those two. Then we have Apple. I mean, I've got to own some Apple shares, right? But there are very few of those that I own. I think Apple has gone up, and rightfully so. But I believe it is overvalued at this point. So I'm going to wait to add any Apple shares until the price comes back down a bit. And then lastly, I have Franklin Resources. It's ticker symbol BEN. It is a financial management company similar to T. Rowe Price. I've chosen to hold Franklin Resources at this point. So any investments that I'm going to make in that space, probably going to go more toward T. Rowe Price rather than Franklin Resources. But, given market conditions, that could change. So at this point, I'm holding on Franklin Resources. So those are my 6 that I'm going to build on. There's the 5 that I'm going to hold. Now let's look at the 7 that I'm going to sell. So I've got 3 REITs in here. I've got Essex Property Trust, ESS, ticker symbol, National Storage Associates, ticker symbol NSA, and NNN REIT, which it's recently changed its name. It's also a REIT. And my goal here is that I have way too many REITs for the IRA portfolio that I have. So I need to reduce the number of REITs. It doesn't mean that I dislike any of these 3, but I wanted to reduce the number from 6 REITs down to 3 in my portfolio. So these happen to fall out in the bottom. It's not, again, that I don't like them, but I am going to sell them over time. Maybe not right away, but I'm looking for the right pricing to be able to sell those. Then I have the 4th one, which is F&G Annuities. That is a distribution that came from Fidelity National Financial. It is a insurance company, and I've held on to that. It's really not done much. It's gone up and it's gone down, and it's really about where I have a basis in it. So I think it's probably just time to sell that. I think I'd rather own Prudential, for instance, as an insurance company. So I'm going to get rid of those shares. This might be surprising. I am going to sell my small position in SCHD. So you may ask, why are you selling SCHD? Well, I believe, and the way I'm running my portfolio is that I'm looking for a portfolio that's going to have a decent dividend yield and a decent dividend growth. And that is, if you think about it, the purpose of SCHD. So if I didn't have the interest in building my own portfolio, then I would go to the ETF of SCHD. I would put my money in there, and I would, check it every few months and move on with life. But, I enjoy this stuff. So what I'm doing is building a portfolio that is meant to do the same thing that SCHD is doing. So I'm going to get rid of SCHD, and I'm going to use it as the benchmark by which my portfolio is going to be measured. So let me show you this particular screen, and I think it'll make more sense. So hopefully you can see this on the screen pretty well, but you can see this top line here is SCHD. It is the Schwab US Dividend Equity ETF. It's Current price is just a hair under $70 per share. So looking at this line, you can see I'm going to move this a little bit to the right here. And you can see that, the weight in my portfolio is 0.09%, very small. But it shows me, and this is Morningstar's portfolio tracker, it shows me the total return for 1 week, 1 month, 3 months, year to date, 12 months, 3 years, 10 years, et cetera, et cetera. So it gives me that for the ETF of SCHD. So when I then compare that, down here at the bottom is my portfolio. This bold line here is my portfolio. So you can see that the SCHD return for 1 week is 2.02%. So they did very well. My portfolio only did 1.04%. But when I look at this past month, SCHD total return for 1 month is 3.53% negative. My portfolio is only negative by 1.33%. So my portfolio has outperformed in the last month SCHD. When I look at a 3 month return, SCHD is down 5.56%. My portfolio is only down 0.9%. When I look at year to date, SCHD is down 5.77%. My portfolio is up 2.51%. So hopefully that makes sense. I'm planning to sell off my few shares of SCHD, put that into my portfolio, and I'm going to use SCHD as a way to benchmark the performance of my portfolio, because that is the purpose of my portfolio. So I got two left. One of those is Alphabet, ticker symbol GOOGL. It's a very small position. Starbucks is also my last position that I'm planning to sell. Both of those very small positions. They've had recent price run-ups, so I'm planning to sell those. So in summary, I'm looking to build 6 positions, hold 5 positions, sell 7 positions. So I have 45 positions in my portfolio. When I do get to a place where I am going to sell all of these 7 portfolios, again, I'm going to wait for the right time, but I'm going to sell 7 of those. That's going to get me down to about 38 positions. I think that's a pretty good spring cleaning. So interested to hear from you. Are any of these decisions surprising to you? Do you agree, disagree? I want to hear about that in the comments below. Doesn't mean I'm going to change anything, but I would like to have that dialogue. So recently I walked through my entire portfolio. I like to share and be transparent about that. If you want to see that video, it's over here. We are at the beach this week. I'm going to take some time now, go enjoy the family, enjoy the beach, and I will see you on the next video.